Welcome to our jointly organized webinar by WAP, Infra PPP, Istanbul PP Center of Excellence and DEİK. I am the chairman of Istanbul PP Center of Excellence and DEİK PPP Committee, Dr. April Aydın, and also I am the chair of CIS chapter, as you know. I believe this webinar is a great chance to coordinate, to make a step forward and enhance our cooperation between our associations. Today's topic is very important for all of us, for the future of infrastructure and the market economy, how to increase the ESG impact in PPP projects. As you know very well, post-COVID era, ESG factors became very important and major indicators of sustainability, determining financial performance of the projects from all perspectives, public, private, and the people. So today we have valuable and distinguished speakers with us, and Jean-Christophe will be the moderator. This is an introduction by myself, and I would like to hand over the floor to moderate the program. So we have 1.5 hours, I think. JC, am I right?
Exactly.
Okay, so the chat box will be closed, but you can use the question and answer box at the bottom of the screen, and JC will collect your questions and he will moderate. I wish you a very fruitful discussion. The floor is yours, JC. Thank you.
Thank you. So, screen share works. So, my name is Jean-Christophe Barth. I have co-founded the World Association of PPP Units and Professionals, a global network for better public-private partnerships in 2018. Environment, social, governance, ESG investments in PPPs are of great importance. Today's webinar aims at looking at ways to increase the ESG impact in PPP investments. Our great panelists have given me permission to encourage you to ask anything related to the topic, and I encourage our audience to use the Q&A box to interact with the speakers and guide us in the conversation, because we want it to be dynamic and really useful for everybody who listens in. We have many people listening in. This is why we can only interact through the Q&A box, but please make use of it. The SARS-CoV-2 pandemic has caused unprecedented damage to economies worldwide. Our trading systems have been massively disrupted. The healthcare investments in medical facilities and equipment due to the pandemic will be huge. Some estimates say it's going to cost $650 billion to have the appropriate level of healthcare infrastructure. Meeting demand in worldwide telecommunication and IT would require another $210 billion of investment. Meeting demand, the massive impact will result from robotics and artificial intelligence-based manufacturing. In order to be able to grasp that, we will have to do massive reskilling of our workforce. Our food production and distribution will have to be reconfigured to become more resilient. Transportation, ports, airports, everything that has been severely hit through the pandemic will also be up for modernization or enlargement. Our power and water supplies, sanitation that are essential for services. I mean, we can see that the tourism industry, everything that is entertainment, we have been severely impacted, and some speak of estimates of up to 320 million jobs that could be lost due to the pandemic. Governments are struggling to adapt in the face of limited financial capacities to provide essential services. Massive investments are necessary to adapt to the new normal, and people-first public-private partnerships can be part of the solution to solve the enormous issues facing economies worldwide, because business as usual has proven not to be able to answer to the current challenges. To meet these extraordinary challenges, more responsible ESG investments in infrastructure PPPs are necessary. For infrastructure to serve a positive purpose, risks must be managed and societal, environmental, and economic benefits enhanced, because they underpin human and economic development. Both public and private need to learn from each other with regard to the inclusion of the social impact investment dimension at the mega PPP level so that the beneficiaries of the infrastructure reap the benefits and achieve the 2030 agenda to de-risk projects. I have the immense pleasure to introduce our first panelist. Dr. Raymond Zana is titular professor at Basel University and co-founder of CSEND, the Socio-Economic Development Organization, a Geneva-based NGO research and development organization founded in 1993 with ECOSOC special consultative status accreditation. Raymond is a member of the PPP Bureau of the UNECE and has been a member of expert groups on global sustainable development goals at the United Nations since 2013. He teaches at various academic institutions and has published extensively. His topic in today's presentation is aligning PPPs with responsible business conduct and the SDG strengthen an investor, here we go, sorry. Strengthen the investor's reputational capital. Allow me to just make one precision. The webinar is being recorded and we will make this video available afterwards on the YouTube channel of WAP and on the website. This is it. Let's start. Raymond, you have the floor. Raymond, can you hear us?
Sorry, I had to unmute.
Thanks.
So, Jean-Christophe, thank you very much for your kind introduction. Dear co-panelists and dear viewers, it's a pleasure to be with you and to spend some time on a very important topic. Being mindful of time, I'd like just to make a few points to present the larger context of our webinar. And since we are talking about, at the same time, about SDGs, about PPPs, and at the same time, of course, mostly ESGs, it's a lot of topics to put into one basket, but they're linked and related, and I will explain that shortly. First of all, let me start about reminding us that there is the SDGs. We have figures from UNCTAD going back to the World Investment Report 2014, which talked about the need to help developing countries implement the SDGs. And at that time, there was a gap signaled of $2.5 trillion US. That was then in 2014. Now, as Jean-Christophe already mentioned, of course, we have COVID-19. Donors have been hit. Everybody has been hit. There's less economic growth, higher debt. The supply chains have been broken to some extent, and there's reduced trade. So there's less money easily available. However, you will see with the following slides, there is money around that we could fruitfully invest in what we consider to be an important investment, that's ESG related investment. Next. So let's look at what kind of infrastructure investments could be undertaken, should be undertaken. We have the physical infrastructure, sort of the traditional infrastructure investment in energy, transportation, telecom, and water. Then also social infrastructure related health, education, social services. We shouldn't forget the political infrastructure, laws, administration, institutions, and finally also security infrastructure, armed forces, police, and prison systems. For all of these the 4 levels or types of infrastructure investment, there are possible PPPs, and we will come back to that later on. Next. Now, when thinking about investment, and when thinking about also of different forms of investment, we should bear in mind it could go, as you see on this chart, from left to right, meaning it could all be done by the government, or it could be done through some mixing and participation of the private sector. As you see on the sliding scale from left to the right, it could go all the way to privatization, or in between there is PPPs, and I will say more about that shortly. The next. So the policy choices. As I mentioned before, governments could do infrastructure investment by themselves, provided they have funds, provided tax income is flowing, and they can go about doing that. And I think it's certainly more the case in countries where the tax system and trust in authorities are very high. They could also go to traditional procurement, provided it's a corruption-free professional form of procurement. Then we could have PPPs, but I will show you later on another slide. There are all sorts of PPPs, and oftentimes neither the government nor necessarily the public are aware of what this means and what are the risks for both the commercial partner or for the government. We could also think about privatization, leading to investment in public in infrastructure, but I would say that should only make sense if it doesn't mean that a public monopoly becomes a private monopoly, and at the end the rent seeking will make it less possible to have an efficient form of investment in infrastructure. And finally, the PPPs. As you might have heard in terms of the UNECE, where I'm a member of the Bureau and other speakers as well, there is this the coinage of a new term, that is to move from value for money, that's the traditional form of PPPs, to value for money and value for society. And we will say a bit more about that shortly. Next. Next.
Yes.
Okay, here's the list of some of the kinds of PPPs. Build on transfer, build, lease and transfer, build, operate and transfer. I think you can see it all listed here. The reason why I'm listing it here is probably most of you watching this webinar are not aware of what these terms all mean, or the acronyms. Now, this is worth to become more informed, particularly if governments and civil society are involved in such kind of PPP investments, because it means different kinds of levels of risk for government or for the commercial partner, and also for the stakeholders who are involved in such PPP projects. So I just want to flag this. There are all kinds of PPPs with all kinds of risks that go with it. Next. So now there are ways to help public sector investors who go into infrastructure investment to also follow lines of good conduct. It's sometimes also called responsible business conduct. And there are four, for instance, instruments. The first one is the OECD Responsible Business Conduct Guidelines, which are now in the fourth revision, go back to 2011, and they cover ground. They're quite they're covering a large level or large amounts of very important aspects of infrastructure investments, such as how to handle human rights, how to be also mindful about conditions for employment, how to avoid bribery, consumer interests, science and technology, competition and taxation. So you see from that, there are guidelines which cover almost, I would say, most of what businesses should be concerned with when they go into investment in infrastructure. Then we have also the UN guiding principles, which look at ways to better guide business so they wouldn't, in that sense, infringe on or violate human rights. That goes back to 2014. But like the OECD guideline, it's non-binding. Then we have the ILO declaration about principles for multinational companies to be mindful about social policy, particularly labor rights. That's also non-binding. But there is a new attempt now by a group of countries and also NGOs within OHCHR of the United Nations to create a binding treaty, which in that sense would make it mandatory for companies to respect certain conditions of human rights. Next. Now, when it comes to the current situation in terms of finances, we have a bit of a paradox. On one hand, as we here could read from Stiglitz, there's an enormous amount of money kind of idle sitting in the treasury the numbers are mentioned that it has moved from 1.5 to 2.9 trillion US dollars, which are sitting basically unused, and I guess waiting for an investment which would guarantee enough return on investment and secure investment. So there is money available waiting to be invested. The question is, how could we help bring this amount of money to a fruitful form of investment based on the ESG conditions or the ESG principles that we will be talking about later on. Next. So here is an overview about the SDGs, the Sustainable Development Goals, or the 2030 Agenda. As you can see in different colors, there are larger areas where the 17 goals are in the outer circle, are grouped together to make it easier to understand the importance of the different SDGs. You have some that are focusing on improving governance, others on natural capital, the environment, others about also climate change and empowerment of human beings in different forms, from gender to taking care of decent work as well, and basic needs. So basically, I'm suggesting that if we, think about the money needed as well as the money that is available, the question is how to best invest this through ESG, and I will explain a bit more what ESG is, but though it flows into these SDGs, which are have been agreed by our governments, which guarantee best to move towards a sustainable future for all of us. Next. So now let me say something about the ESGs. What is it? Actually, it's quite a new term. And it goes back to publications, and it goes back to initiatives which have been taken by the Global Compact together with the International Finance Corporation of the World Bank Group and the Swiss government, by following the suggestion by the then UN Secretary General Kofi Annan to look for ways to make finances also become more sustainable or more supportive of sustainability. Next one. So here are the three capital letters that are part of ESG. EG stands for environmental criteria. So that financing should, in that sense, be put into infrastructure or into investment which will be low carbon or emissions, which would help reduce the risk of climate change. S stands for social criteria, to find ways to invest in a way that communities, individuals, also through better labor relations, would be benefiting from such investment, and then also through that contribute to the country's development. Next one. And then we have G for governance. That's the internal system within a company to be ruled by criteria which make sense, which are rational, and which could guide the company towards a sustainable form, not only of investment, when it goes into investment, but also just in general to operate based on criteria which are close to sustainability. Now, if you look at the bottom, it shows that so far what Kell has come up with in terms of figures, going back to 2018, we're talking about a lot of money, 20 trillion according to him and his assessment, 20 trillion of assets under management are now going under the guidance or under the principles of ESG. Some very much so, some only partially. Next. So the findings based on the research which has been done by CFA and PRI, covering 1,100 investors and fund managers, they were asked, well, tell us what's happening in terms of ESG factor in terms of your own funding and funding practice. What they said was, in terms of governance, that's quite so, and companies and investment follows principles of governance. What is much less the case is when it comes to environmental and particularly to the social factors of sustainable investment. And I think we will have colleague speakers and panelists who will say more about it. So basically, what's missing is enough attention given to the S and to the E of the ESG. Next. Well, what we should think about is what to do if you think about the business, if we consult businesses, what to suggest to them. And they should also become aware that now with all the instruments that I made reference to in a previous slide, from the OECD guidelines to the ILO declaration, there are rules that it is worth to bear in mind and to respect and to follow in order not to run into big problems. And I say more about the big problem. But that's just now to be a bit on the negative side. There is, of course, the major part is also to be on the constructive, positive side. It is also valuable for investors and companies to go for ESG investment. And my colleague speakers will say more about that. Next. So the risks, we should, in that sense, let the companies know and investors know if there is violation of these standards and guidelines that I mentioned before, then it could lead to really a lot of trouble. And I will say much more in the next slide. Next. Okay, that's the end at the same time of my presentation, but wanting to conclude with just one last message. It would be very wise for companies and investors and the trust fund managers who advise the investors to go for ESG, but to respect also the best standards that I've been mentioning before. Because if they don't respect these standards, it could lead to complications. It could lead to public problems in terms of a loss of reputational capital, which if that's so, let's remember companies, when they lend money to companies, they want to know how high is the risk of this company. And if a company is seen as being violating basic standards of investment and of business, the interest rates go up. So it doesn't make sense commercially, but most of all, not following these principles makes the company look like it's not a company which also is interested in creating value for society. I'm closing on my presentation. Thank you very much.
We'll now listen to the Executive Director of UBS Wealth Management Sustainable Investing Advisory, Jaume Iglesias, who is going to explain to us in what way can wealth management industry and what it is doing to evaluate and ponder the economic, social, and governance dimension in investment decisions be helpful, maybe also to assess the way long-term PPP investments can use these techniques and derive some of the learnings. Jaume advises clients on investment solutions that consider social and environmental values alongside financial returns. He addresses the key issue of how wealth can deliver more than financial returns. Prior to joining UBS in 2005, he worked for 11 years at Deutsche Bank, where he was head of investments and product management of Deutsche Bank Pensions and Life. Jaume is a fellow of the International Actuarial Association. He holds a bachelor's degree in mathematical economics and a master's degree in financial markets from the University of Barcelona. He's a visiting lecturer in impact and sustainable investing at leading academic institutions. And today we have the privilege of having him to explain to us how the actual implementation of ESG is being done in investment decisions. Jaume, you have the floor.
Thank you, Christoph. Warm welcome from my side. I look after sustainable investing advisory at UBS, and my job revolves around meeting with clients that have an affinity to sustainability. And I would say that the industry in general has come a long way. Started sustainable investing as a very small thing a long time ago. But this is an industry that has, I mean, we've seen incredible growth over the last few years. And the last 2-3 years have been fantastic, I would say, better than anyone could ever expect. And one of the questions that we often get from investors is, why is that this has been so successful? And then if we move please to the next slide, try to capture here what sustainable investing means when I think about sustainable investing. And to me, it's just a proxy for well-run companies. And what I mean by that is, in reality, it's just common sense investing. And that's probably one of the reasons why it's having so much success lately. Because if you think how you want to invest your money, one of the things that most likely would make sense for you to consider is whether the employers treat well their employees. And certainly that has a social dimension, a human dimension. But even if you forget about those important things, in reality, what you want to do is you want to invest in companies that have motivated employees, right? Companies that attract the talent, companies that retain the talent. And it's difficult to understand the success of a company if you don't have good employees. I mean, it's almost impossible, right? So that's why sustainable investing tries to look into things like how much diversity companies have, because it's not really a good investment if you all of a sudden give up 50% of the potential talent, or good working conditions, or the amount of time and money that you invest in training and human capital development. So exactly the same thing happens with corporate governance, where we're trying to invest in companies that have sound risk management, no corruption, independence of board members, because that will result hopefully in no fines. You will have your license to operate. You won't have any big scandal. And that's just good for investments. And same thing with clients. You want to have loyal clients. The best thing to have loyal clients is to have safe and quality products. So I guess the ultimate question is for PPPs, and I'm coming from a completely different angle than PPPs, but just sharing experiences from my little world is what we have seen in the private investment world is that the addition or the incorporation of ESG criteria has helped not only to satisfy the needs of the very large number of investors who care about social and environment, but also just purely profit optimization. And we'll see that on the next slide when we compare just hardcore figures. And can we move please to the next slide? And then there's just simply a comparison between the performance over the last 30 years between the Standard & Poor's 500, so SP 500, Wall Street, kind of, and the KLD 400, which was the first social index that was launched almost 30 years ago. So we have now enough experience to know how this behaves. And as you can see, they behave very similarly, but the sustainable index has actually overperformed the Standard & Poor's 500 for around 50, almost 50 pips every year. So even if you have a completely disbelief in climate change and treating employees and governance issues, purely from the selfish investment point of view, you should not disregard these factors because you're actually making more money. If we move please to the next slide, then what we can see is why investors are ready to pay what they're ready to pay for each stock. And you see here on the left-hand side, starting year 1975, moving to 2015, and the greenish area responds to the tangible assets. So investors were in 1975 ready to pay more than 80% of what they were paying based on intangible assets, so things that you could touch, machine, inventory, building, stable, so to speak, right? And this percentage has grown dramatically over the last years, and today more than, now we're saying 84%, but actually it's even more than that, it's intangible assets. And these intangible assets revolve around ESG, revolve around things that are very hard to measure, things which are very hard to identify, yet we all know that they're responsible for the big part of evaluation of a company. It might be Does this company have loyal clients? Does this company have the right talent? Does this company, or is this company able to attract the right talent from competitors? Does this company have the good branding, the good reputation, has strong risk management? All these things that just encapsulate in ESG. If we move please to the next slide, what we see is that the interest on this field has grown massively as the assets reflect, but essentially trying to simplify the three types of clients that we find. On the left-hand side, you see that there's this client that says no interested. Climate change is a fad. Okay, fine, good. Right, no comment. Then on the right-hand side, we see this is around 20% of the clients that say yes, finally, someone talking to me about something meaningful. And in between, we have these clients who are kind of open to sustainable investing, and we call them the why not. If you add up the open to SI plus the yes, finally, you have like 3/4 of investors in general, they are interested in SI. Now, the question for me, which is relevant, is because there's 3/4 of clients who are interested, will the ESG factors become the next minimum acceptable standards from clients, so that if you don't have it, you simply can't sell? We're not there yet, but I think we're starting to see the transition into that situation. And that might be, I guess, something that PPPs could also see in the near future, where if you don't adhere to minimum ESG standards, you're simply out of the game. If we move to the next slide, and just to conclude, one of the sub-asset classes, as we call it in the financial world, which has seen an explosion over the last few years, is the so-called green bonds. These are regular bonds, but they have environmental benefits. And you see that the assets under management have grown exponentially, and they are used both by private corporates and also by states and sovereigns to launch projects that have a clear environmental benefit. So one of the questions that we could think of is whether this expansion of assets and being captured by green bonds can become an alternative to finance green PPPs in the future, because there's more and more interest from investors into deploying money into this kind of instruments. And I'll pause here. Over to you, Jean-Christophe.
Thank you very much, Jaume, for these insights into how the investment industry is doing that in wealth management. Professor Dr. Mahmoud Moyeldin is the UN Special Envoy on Financing the 2030 Agenda. He has served many years as Minister of Investment in Egypt, where he oversaw, amongst other, the implementation of the PPP legislation, and also sat on the board of the Central Bank of Egypt. Until recently, he was Senior Vice President for the 2030 Agenda at UN Relations and Partnerships at the World Bank Group. He has authored numerous publications and articles in leading journals in the field of economics, finance, and development in English and Arabic, and holds numerous leading positions in think tanks, research centers, and academic institutions all over the world. I cannot wait to hear his insights on the role public-private partnerships play or need to play to achieve the UN 2030 Agenda. Thank you very much, Dr. Mahmoud Moyeldin, for honoring us with your presence today. The floor is yours.
Right. Thank you so much. Good afternoon and good morning and perhaps good evening to you all, for those who are listening, and a great pleasure and honor to be with this distinguished panel today. Yeah, let me build on the two important interventions by my good two panelists who spoke before me, Dr. Saylor and Mr. Iglesias. And just try to link what is happening at the global level and what is happening at the project level and the communities and the local level. Because at the end of the day, these PPP projects are dealing with essential activities, services, and support for people especially if they are engaged in essential utilities, infrastructure, and the variety of sectors that were described by the previous speakers. Since the talk about the PPP started, and there was an interest in it like 15 years ago and more as a kind of a good modality for funding. Since that day, I think until now, we can really comfortably say that there is still a great potential for PPP to be realized. Infrastructure is still being financed through conventional modalities from budget side or from support, direct support of development finance institution. PPPs do not really have that significant contribution in low-income countries, in countries that do not really have a good track record for investments, despite the fact that there have been a great deal of improvement on the legal frameworks in establishing PPP units, in improving the regulatory structures, but we still constrained by many matters related to capacity, to the pipeline of quality projects, to disclosure for what is happening in the field of the existing projects, and to what extent that the kind of contracts we have today are flexible enough to accommodate the changes, the expectations of the public, even before COVID-19, and now higher expectation of the public to have better quality work, focusing on essential areas related to the health sector, for instance, education sector, the digital platform that need to be created, and indeed, as mentioned by the previous speakers, full adherence to ESG and trying to achieve the SDGs. Big ambitious goals, and we are very much constrained, but hopefully the current crisis is a good reminder of what we should be doing going forward. Next slide, please. So the kind of crisis that we are having today has been mentioned. It's a kind of a perfect storm. Health shock, real economy shock, with the negative growth in countries around the world. More than 170 countries are going to be seeing their per capita income growing negatively. Estimates of growth range from -3% by the IMF in April. A few days ago, OECD and the World Bank are telling us that globally growth could be in more than -5. So this is going to be a decline in growth and contraction of economic activity. And in some countries, they might be realizing a contraction of up to -10%, as it may happen in some of the European countries. But these are projections still, and they are being revised. And it's all about how the recovery is going to be realized. And people are still with optimism to talk about a U-shaped, although that the V-shaped kind of recovery, unless you are only focusing on the stock exchange and its behavior, is not necessarily the kind of more likely scenario. Then you have this kind of volatility in the market. This is the kind of environment that anyone, even if you are very much as we should be, focused on our own assignments in a particular design of a project. That could be a PPP project in some low income or middle income or high income country. This kind of a context is very important because it has certain implications on the kind of work, on the kind of regulations and the competition and the market conditions. Next, please. Yeah, and just a reminder that we are not over it, despite the fact that the pandemic is being put under control, but many countries are still struggling to flatten the curves. There is some good performance in some countries, regardless of their governance structure, like Vietnam, for instance, or Greece. So there have been some interesting positive developments in in some countries, including actually in the Middle East as well. We see countries like Lebanon and Tunisia doing well in this front. So it's not really an issue of the governance or the political economy basis, but based and its differences. It's the capacity of the country in question to manage a crisis better. And different crises and different countries had their own ways of dealing with this crisis, and the crisis revealed the strength and weakness of many systems, and we need to be reminded of that, because that can tell you something about risk management as well. Risk is not just about the project risk or the particular PPP kind of arrangement that you may have, or even the country risk. It's much more complicated than that. Next, please. Yeah, as I mentioned, all kinds of possibilities of growth are linked to the performance on the health side. And this is from a recent Brookings study, which is basically telling us to what extent countries can go back to the anticipated trend or the warranted trend of growth, a V-shaped or a Nike swoosh shaped recovery, or a W-shaped recovery, or L-shaped, or a Z-shaped, or a U-shaped recovery. All of these kind of shapes are basically corresponding like a mirror to the performance in the health side. So if you have a W-shaped recovery, it's very likely that it is corresponding to an M-shaped kind of a performance on the health sector, that you had an increase, a decline, a second wave, and a decline. But all of these are possible scenarios. What for the world, and more importantly, given that people are talking now about more of national level, more local level, what's really happening in the economic environment of the projects that you are conducting in the particular area of focus. Next, please. Yeah, this is a kind of a dashboard of the state of the economic conditions from the recent global economic prospects of the World Bank Group, and it tells you what I just mentioned about growth and how it is going to be declining in advanced economies, emerging markets economies, and the global economy at large. Trade growth, many assumptions came from WTO from -13% to -35% of decline. FDI is expected to decline between 35% to 45% based on some estimates, including from the UNCTAD. We have as well decline in remittances by no less than 20%, and we have seen the increase, meanwhile, of global debt, from government, private sector, and the household sector, including the increase of the cost of borrowing in many emerging markets and middle-income borrowers during the last few weeks. And some countries cannot just access the market, despite some improvement in liquidity, but still the cost is still very high for many middle-income countries to tap on the market. They put that into consideration because this is one of the possible sources of funding, and Mr. Iglesias talked about the bond market as a potential source, and that is being affected as we speak, at least in the short term. Yeah, this is just an elaboration on what's happening in the market and therefore volatility, and the commodities markets as well are seeing some interesting developments, especially in the oil prices. So it's a kind of an environment that you cannot really assume, if you are an investor, that it is really a market that gives you all what you need of necessary information to conduct your business. So you need really to work under the different scenarios of taking decisions under uncertainty. Next, please. Yeah, again, a reminder that all of what we have been seeing today in SDG 3, Sustainable Development Goal number 3, the one related to health, is not a black swan. It is not really an event that people shouldn't have been well prepared for. There have been a variety of different reports at the national level, at the global level, including the report that came from the joint commission, independent commission for the preparedness, the Global Preparedness Monitoring Board. And that report is available to tell us that actually back in September, when this report was published, as if they were describe the situation that we are in today. They are not fortune tellers. They are not with a crystal ball. These are all professionals who have been in this area, including the former director and former prime minister of Norway, who have been in this business, in addition to many practitioners who told us clearly that as far as SDG 3 is concerned, the countries, including advanced economies, are not adequately prepared to deal with a health shock, and they didn't really benefit from all of the shock that we have been seeing, H1N1, SARS, and more recently, Ebola. I hope that the current crisis is telling us something about this area, and this is a potential area for public-private partnership. And I know, of course, that the social sector is not really as simple as the infrastructure and utility sector when you are conducting the PPP for a long-term kind of a contract, but it is doable. And we have seen in the studies very good examples of social sector PPP projects. Next, please. Yeah, so the previous speakers talked about ESG and the SDG and how can you link them together. So perhaps, well, if you are going to be spending the rest of the time today to talk about the 17 goals, the 169 targets, and 230 indicators, that will take us forever. But here, this is a good way, perhaps, to describe the SDGs with the ESG. So the E and the S and the G, forget the economic dimension for a minute. So we have here the environmental dimension, which is basically SDGs 13, 14, and 15, including climate change. And then you have the social dimension, all areas related to gender equality, income equality, all of the investments required for the human capital, including education and health, and the social dimension. And then you have the governance dimension, which is SDG 16. So this is a good way of presenting the SDGs in an ESG format. And I'm saying that for the following reason. The governance dimension, especially at the corporate level, had been always taken seriously since the inception of the ESG. The environmental dimension during the last few years, especially with the Paris Agreement, started to get some traction. And there have been great opportunities either in the investments for adaptation or mitigation. So the E got bigger. The G had been already there, but the E got bigger. What happened after this crisis, that the social dimension, the S, got even bigger than the E and the G after many years of marginalizing it. So, and how to quantify for that, how to make good tracking of the performance of companies, including the companies or the project that are conducting PPPs, is going, actually it's now, I was following that closely, and you will be really perhaps happily surprised of the number of companies and specialized entities doing nothing but by tracking ESG. How, in the past, a good CEO will go for a big event, inviting people. I love the environment, I love my people, I love governance, and he would just give you a kind of a colorful report on what they want, they are doing. Now there are principles for impact investing. Now there are some good methodology that they have to be applying. Now there are regulators are expecting disclosure based on good methodology and good transparency, and it is not really up now to you if you are involved with public money in public domain to say what you like. So the standards are getting better, and the tracking is getting better, and the technology is allowing us to do that in a more cost-effective way in the business. So this is the ESG. And this, as I was always telling my colleagues at the IFC, this is their domain, this is their good work. But if your company, if your PPP is not really affiliated with a development entity, be it national or international, it's for IFC as the oldest private sector arm of a development agency, development can come natural. Developmental impact is not an area of worry. But if you are conducting that business while you're not coming from this development background, you need to demonstrate, in addition to your ESG, you need to demonstrate your economic contribution. In what way you are doing better in the inclusive growth dimension, in contributing to the revenue of the community and the national budget of the country that is hosting you. So that needs really to be fully factored in any kind of work of a PPP project or corporate project to be in full compliance with the SDG. While you are doing good in the ESG, you need really to demonstrate what you are doing in the developmental side, which is normally neglected in the reporting. Perhaps it might be just being given for granted, but it needs really to be reported on. Next, please. Yeah, with all of these crises that we are facing today in the human side, on the health side, on the financial, and on the economic performance, on the real economy side, the only answer is investment. The only answer is investment. Yes, it's perhaps not really the best hour, the best day, the best moment to talk about investment now, but actually many people are seeing good opportunities for investment. Some of that are a kind of opportunistic kind of behavior to see an asset here and there, or a project that is struggling with liquidity, so you go and acquire it. But now, with the attention, as I was trying to say, to matters related to health, building a health system, building a primary health care, this is a very big domain for a public-private partnership. You can't just take it from the units that need to be established in the districts, in the villages, in the smallest zones of your country, to linking that all together with the whole system, with technology, and to apply the standards. Difficult than building a road or a seaport or an airport, but this is now going to be more on demand. This is an area of great work, and the budgets being constrained today cannot do it on their own, the state budgets. Again, education. Now people are talking about blended education, establishing platforms and all of that, another area of good work. Skilling up the labor force, training centers, linking them to digital technology. And then you need to invest in resilience, all of what I talked about when it comes to climate change in the adaptation side or the mitigation side. And there are some good examples in that as well in areas related to disaster risk management. And then the investment in infrastructure. All what we have been doing in this is important, but we need really, as I said, we need to increase the portion or the ratio of PPP to total investment, especially in middle income and low income countries. But we need as well to invest more in the DNA, the data systems, the networks, and everything that could benefit from artificial intelligence. Next, please. So here there are three real-life examples from the far southeast to the far northwest to Europe. And there are many examples as well in the emerging markets. And here you need really, when you are designing these things, you need really to see what is really happening. Canada, for instance, there is an issue of debt facing many corporations. Governments, as many countries have done, government has stepped in, but they did it smartly, with positive conditionality. If you want debt relief, you need really to connect your effort of debt relief, and we're going to be providing you money as government, but you need really to show us that you are recovering better, that you are going to be linking your activities to being more friendly to some rules related to climate change or environment or sustainability at large. And some good announcements were made by the Prime Minister of Canada early May. Another example is from New Zealand. And here the crisis had accelerated what was prepared for many years about disclosure of projects, including that will affect the markets, the PPP included, about what you were considering to be doing voluntarily. Now there will be some mandatory disclosure when it comes to areas related to climate-related finance. If you are getting money from the system, banking system, or the financial markets, so you are going to be disclosing based on some rules. Here, the disclosure is going to be helping you to be more aligned with what is being expected. And Europe, of course, many of you are based there, and you are aware of the efforts by the European Commission to borrow together, benefiting from the low cost of borrowing and to spend it on recovery. And the condition, again, is to recover better, more green, more inclusive activities and more digital solutions. Next, please. Yeah, so in the good preparations, and many thanks again for John Christophe and the team when we're preparing for this presentation, I was just asked to add a slide to connect all of these kind of things to what is happening at the UN today. Some of you may have followed that mini summit of the 28th of May, talking about finance, debt management, debt vulnerability, role of private sector creditors, external finance for inclusive growth, recovering better for sustainability and how to invest in areas related to climate, and how to deal with the illicit financial flows. This event was attended by 50 heads of state, including from Europe, Africa, Latin America, and of course, Asia was represented and Japan was there as well. OECD countries, emerging markets, low-income countries, all were represented. International organizations were there, World Bank, IMF, IIF, OECD were there. Private sector participation from the International Chamber of Commerce and others. Civil society were there as well, contributing to the discussion, and many think tanks were there. So this is just a launching of good discussion about to deal with these kind of very sensitive areas that are dominating the news, and more importantly, are dominating the way that societies and people are being affected with the financial sector and the debt matters. And we are trying to do our best, because issues related to finance are not just the business of the finance institution. They have political implications today. They have security implications as well, if matters are getting out of hand when it comes to debt vulnerability in particular. So we are launching the discussion groups. Actually, this week we have a meeting in a couple of hours to launch the discussion groups. So I'm updating you of things as they happen, and they are all going to be on the open, so you can access the discussion. Some of you actually are going to be invited for some of these discussion groups based on the areas of interest and domain. And then there is going to be a ministerial meeting, a finance ministerial meeting in September, before the heads of state meeting during the UN General Assembly, to discuss these 6 areas, to make sure that we are moving forward, preventing a crisis, trying to recover and build back better. Requires really this kind of political leadership as the technical solution. Finally, I think I have a slide that sums it all, and there is some issues as well. So this current crisis had all of these factors. It had a revealing effect. It revealed strengths and weakness of countries, as I mentioned. It had accelerated things, bad things and good things together. And it has, as well as all crises, these kind of factors and dynamics to revert to the mean, that people would like to go back to what they assume as normal. So these factors between the acceleration, the revealing factor, and the reverting to the mean are going to be shaping this kind of a new normal in a fast changing world. The world has been always changing, but during the last decade in particular, it has seen fast changes with the Industrial Revolution, with climate change and others, in the positive and negative sides of areas when it comes to investment. But what you need to do is basically 6 areas when it comes to PPP. Coexistent with COVID-19, especially for your business. How are you managing it better from the micro side and in the relationship with government? And what are the opportunities that could be there for new lines of business that were not there for COVID-19 with the same kind of size? Fighting recession is all about investment and spending. What could be the role of PPP on that? harnessing their challenges. You go to the Minister of Finance, Mr. Minister, you are constrained, you are going to be accumulating debt. I'm giving you a solution based on private sector. I'm taking part of the burden, but let's have a decent contract with good regulation for that. We need to embrace digitalization in our work. Even if we are not in digital, digital is part of the solution. Even if you are doing one of the most basic infrastructure, like building a sewage network for some remote villages, that needs really to benefit from this kind of digitalization. And then adopting localization. Here, this is the big thing, that development is not just about big cities and big harbor areas or big connecting hubs around the world. It will be there as well for governorates, for states, for big districts that didn't really have a fair share of opportunities. They would be asking for that. So PPP as investment will come to that. And finally, you need to be ready and be prepared in good coordination with a new role for the state. After crisis, and as we see it today, one don't need to wait. How many signals are you getting now for more interventions by the state? Some of the interventions are benign. Some of the interventions for the investors may not be seen as benign. There will be variety of regulations. The policymakers and the legislators and the lawmakers are going to be competing for new regulations almost for everything. It could be the responsibility for the industry to start early by giving guidance and suggestions on what could be effective regulations. And then be wary of the interventions. Sometimes you may need to live with them in some areas and jurisdictions, especially if they are going to be getting bigger like a Leviathan. Thank you.
Thank you very much, Dr. Mahmoud, for this excellent tour d'horizon on all the potential cases how to apply PPPs. Without further ado, we'll pass the word to Ziad Alexandre Hayek, who is the president of the World Association of PPP Units and Professionals. Ziad is also the vice chair of the Working Party on PPP of the United Nations Economic Commission for Europe and High Commissioner of the World Business Angel Investment Forum for Lebanon. Following a long career in international finance and as investment banker with Citibank, Salomon Brothers, and Suez Capital, Bear and Stearns, he led the Republic of Lebanon's High Council for Privatization and PPPs for 12 years, until he was nominated for president of the World Bank Group. He owns Hayek Associates, a PPP advisory boutique, and sits on numerous boards. And it's my pleasure to listen or to give Ziad now the floor to give us an ESG primer for PPP units.
Thank you very much, JC. Appreciate it. Delighted to be with this distinguished panel and with all of you today. I am going to go to the more micro, if you like, even though the topic is macro, but I'm going to go to the micro, and I'm going to talk about, how PPP units should look at ESG. And I think in our business, this is, we're failing at that. Next slide, please. So, this has been mentioned by my previous co-panelists. The numbers might be a little bit more, a little bit less, but basically we are seeing a huge interest in ESG investments, now exceeding $30 trillion. The reasons for that are that millennials are a lot more sensitive to investing in ESG and are more sensitive to sustainability. Mutual funds, pension funds, insurance companies, sovereign wealth funds have become more and more important in the market, and they are asking for longer, because they typically invest in long-term assets. They want to make sure that these assets are going to be there, not just look good when the pitch is made, but they want them to look good 10 years down the road, 15 years down the road. So they want them to be sustainable. 49 stock exchanges now publish information on ESG related to stocks that are traded on their exchanges. More than 350 large asset managers have committed to ESG principles, and Amundi, BlackRock, etc. The list goes on and on. There are many of them. 97 financial institutions in 37 countries have committed to the Equator Principles. Now, the Equator Principles are a little bit like the predecessor, if you like, of the environmental part of ESG. But this is very important, because if your project doesn't meet the Equator Principles, it's almost impossible to get it financed. And there's the People First PPP concept and the G20 quality infrastructure investment that have gained widespread recognition, and I will talk a little bit about that later on. So you're sitting in your PPP unit, typically, dealing with the politicians in your government on one side and dealing with investors and consultants on the other side. And maybe you have a PPP unit that's within the ministry, or maybe it is independent and it has to deal with the ministry. And this becomes your world. You are no longer thinking about other things. And what I'm trying to do today is to encourage you is to think beyond that. Because there are, like I said, more than $30 trillion worth of potential money that can come your way to invest in your project. And if you're not conscious of that huge pool, which is constantly growing, you are going to miss out on big opportunities. You're going to pay more for the financing of your projects. And you'll find it harder to finance these projects. I'm listing here, this is now old, but but still it's very relevant. Actually, if anything, it has grown. These are companies that are following ESG. You can see Bloomberg, for example. It has ESG indices, it has ESG ratings, the FTSE, the Morgan Stanley index, Reuters. All of these people are looking at ESG and rating it. Next slide, please. So, but as I was saying, ESG is really not taking off among PPP units around the world. And why is that? It's because most of the time, other than, like I said, spending time with your, being involved and busy with your environment, projects are still awarded like construction projects. I mean, everybody still thinks of infrastructure PPPs. I'm going to build a toll road. I'm going to build an airport. I'm going to build a port. I'm going to build a railroad. And how am I going to award the contract? Well, I'm going to look at, construction companies and how they can build and how much is it going to cost and things like this. So the ESG aspect is not being paid attention to. Environmental and social impact assessment is usually left to the winning bidder to do. So it's like, we don't have money in our budget preparation, for budget preparation. We have barely enough money. The Ministry of Finance is giving us barely enough money to pay for the consultants. So, we are in a hurry as well. The politicians are pushing us. The project that should take 2-3 years to award, they want it in 3 months. And so I'm not going to do the full environmental impact assessment. What do? Well, I say, I'm going to leave it to the winning bidder. Once they win the bid and before they start the project, they have to do the environmental impact assessment. Guess what? You're late. You're late because you awarded the bid and you're no longer taking advantage of the financing, of the cheaper financing. Now, a lot of this has to do with educating politicians. And unfortunately, I know that this is very difficult. But we at WAP are doing our best to do that on a regular basis. And we are happy to work with you if you want us to provide assistance to you in not only in how your laws can be adjusted in order to fit the ESG aspects within them, but also how to educate politicians on this. They should not, if they want the project done quickly, they should finance it with government money. They should not look at PPP. PPP has to be done, with time, and especially if you're going to get good financing deals from, you need to structure your project right. The information about the project and the pipeline is usually not communicated to investors early on. So even, you may have done your studies, etc., and you launch the project, you launch the tender, but the investors are taken unawares by it and they're surprised. They need more time. They have no time themselves to look at the ESG aspects and get better financing. Stakeholders and rating agencies tend not to be consulted. So, you know, I've seen it time and again. You know, PPP units look always, especially in emerging markets, what's the World Bank gonna finance me at? You know, I'm talking to the IFC, I'm talking to the World Bank, I'm talking to EIB, I'm talking to EBRD. Guess what, guys? That's not the entire financing spectrum that there is out there. There are zillions of investors. Don't be stuck with this idea that these are the only few people that are going to finance me. Of course, you're not going to get any financing other than from those people if you're not doing your homework right. You need to, if you structure your project well, you consult rating agencies ahead of time, you can get it rated. If you get it rated, you have a much wider investor universe to go to. Governments have not yet fully internalized PPP as a means to deliver on the SDGs and to enhance the ESG dimension. Basically, you know, this is saying governments are still not seeing PPP as a development tool. They're just seeing it as a procurement tool. And we need to change that mindset. And PPP units are often not aware of the tools available from third parties for project ESG assessment. You can do a lot of the work with these third-party software. And next slide, please. So here are, for example, a number of entities that can help you design a project and make sure that it is going to get proper ESG rating. I mentioned here Envision, for example. UNECE is working with Envision and some other entities. And we are, as UNECE, developing impact assessment tool for that. So, but these are private sector entities that you can go to, and make sure you have enough money in your project in your project development budget to pay for such things. Next slide, please. Fitch ratings. So here you can see that you know, S&P also has started doing infrastructure ratings for projects. So you can see you can get your project rated by one of the major rating agencies. And next slide. So now we talked a lot about ESG, and the thing is environment, social governance, and a lot of time is spent on the environment, and that's the easy part. In terms of at least, you know, project structuring, etc., because since the 90s, this is happening. The social impact now is taking more of a role. So we can see the G20 Principles for Quality Infrastructure Investment. They emphasize, among other things, these are the criteria. They emphasize the social aspect. You can see number 5. If you like, 1, 2, and 3, these are their principles. Are about resilience and economic efficiency and sustainable growth. So this is, you know, a lot of this has to do with the value for money. But then you can see ESG principles reflected in 4, 5, and 6. Next slide, please. Similarly, and some of these things are repetitious, but UNECE has for a long time now been talking about people first PPP principles. And these are having, you know, making sure that people are benefiting from the project, not only value for money, but value for people. So the access to services and equity among the users, economic effectiveness and fiscal sustainability, environmental sustainability and resilience, replicability of the project, and stakeholder engagement, working with society early on. As you do these things, if you're going to work with society early on, you are going to create a much more sustainable project. Next slide, please. Aside from that, so we've talked about value for money, we've talked about value for people, and our colleagues at CNET are developing something called an intergenerational redistributive effects model. So while the other rating models typically follow a KPI approach, basically, these are the KPIs. Are you meeting this KPI or not? And then you're rated based on that. CNET has developed more of a financial model that actually quantifies what they call value for people, as well as value for future. And by that, they mean value for future generations, because PPP projects are long-term. PPP projects, you know, sometimes are 20, 30 years. And we oftentimes are always, as PPP units, thinking of the immediate, what's going to happen the next 2-3 years. And we really are not planning in our mind what is the impact of this project going to be on the future generation. And next slide, please. So this is just a slide to show that part of the model of how for instance, in this case, how public debt emission compares to a PPP deal for from a generational perspective. And we are happy to provide you more information on that should you be interested. Next slide, please. So in conclusion, PPP units will ignore ESG at their own risk because then they're missing out on a lot of good opportunities for good financing. There are a couple of things I also want to mention that I didn't mention. One is that, like I said, a lot of attention has been paid to economic and social aspects. Very little attention has been paid to governance. And from my dealings with the multilateral development banks, I know that they have long checklists. They will ask you a zillion questions about the environmental aspect of this. But comes to governance, you know, it's like, you know, you tell them, but guys, you know, this is a white elephant. Here, the minister, this is big corruption. They are, you know, this project is not structured correctly. And they're like, oh, no, you know, this is, does it, you know, is it harming the environment? No, okay, then this is good. So, you know, please do not be, take this seriously. If you do not have the proper governance, if you are not fighting corruption, if you are not doing things right, your project, you'll be very happy the day you inaugurate it. And 3 years down the road, people are going to be maligning you. You know, you don't want that. You want your reputation to be saved for the longer term. So do your things right. Look at value for money, for sure. If the project is not, you know, like, I mean, financially sound, it's not going to happen. Look at value for money, but please look at value for people, and please look at value for future generations. Thank you very much.
Thank you, Ziad. So now the floor is open for your questions. I have already received a couple of questions in the Q&A box. I'll read to you the first question, and feel free in the panelists to answer in a succinct fashion. PPPs in some developing countries do not have very good reputation, especially in developing countries, as some irresponsible investments from the private sector left all the burden to the governments and also have not invested in quality projects and what is actually needed in the country, but were looking only after their own interest. How can this be rectified? And what are the safeguards for that, so that the companies do not just pay lip service to ESG and other regulations? Also, how are human rights being respected in developing countries when investments are done? Unfortunately, I don't have a name. It's an anonymous attendee, but let's give an answer to that, please. Who wants to go first?
Probably let Joe may respond related to the companies. I would say.
Jaume, would you like to answer, please? Jaume?
Yeah, sorry, I was on mute. So I'm not coming from the PPP, so I can't really judge on what is the role of PPPs and what's been left to the governments. I think maybe just from my angle is what is the ability of ESG standards to improve a project, right? And how much good they have brought over the last few years or not. And because it's maybe just a question of more general nature, and I think it links back to also another question that was posted previously. And what I would say is that ESG standards in general, I think trying to look at them critically, what we have observed is that companies are getting better in relative terms. So companies that try to follow ESG standards definitely get better. And ESG investments and the pressure from ESG investors and large society is helping companies to consume less water, to emit less CO2, to have better working conditions for the employees. All these things is true. Yet there's a question always of relative versus absolute. So I think it's companies are getting better in relative terms. Not all companies are getting better in absolute terms. What I mean by that is if we look at fashion company, for example, they, instead of consuming 300 liters per t-shirt, now they're consuming 200, which is already quite an improvement, right, for environment. Yet if we still keep buying stuff as if there would be no tomorrow, and you know, I think in Europe on average we buy like 27 or almost 30 pieces of new garment every year, then nobody's going to get us out of this mess. So ESG can bring a lot, as long there's a kind of a movement of more general nature, which does not involve only companies, and does not involve only governments, which we have the tendency to criticize. And I'm not saying that we don't have to, but I think there's also a role for consumers and for populations at large to try with their behavior to consume and invest responsibly. That's what I would say.
I have another short question for you from Ravi Shrari. How are the green bonds placed in terms of pricing and other terms versus debt instruments? Also, if you can highlight in the time it would take, how long is the time it would take to approve investment through such green bonds?
Just to make it easy, in terms of risk and return, they are identical to conventional bonds. Maybe there's one pip above, one pip below, but the rule of thumb is they are identical. In terms of approval, there's companies, it's not compulsory for companies to have a green bond approval stamp, so to speak, at least not yet. Although most of the companies do it just because of reputational issues, and then there's lots of companies that go through this external audit process, and that just takes, that costs some money and delays the project. Well, not delays, but just takes some time. But it's quite efficient, I would say, all in all. And it gives you access to, I think on average, there's the issuers, they account for 1/3, a bit more than 1/3 of new investors. So it gives you more resilience, access to wider pool of investors, which is also the company's value.
Thank you.
Yeah.
I have a question now. Yes, please.
Yeah, John Christoph, very quickly on the two issues that were raised by the participants. On the first one, we might be falling unless we're not very careful here. And the issues related to being victims of what's available of data and what's not. So when you have the data, you tend to go and measure, and the slogans about what good measured, good managed, and all of that. I think we shouldn't really be victims of that, as we are being warned by Professor Richard Thaler when he told us that we are always victims on this. Richard Thaler, the Nobel Prize laureate, and in economics, and basically there are many areas here of work that we need to have the kind of acceptable measurement for, not for us just to focus on what we can measure and ignore some important issues of what Ziad mentioned about this issue of value to the people and how can you measure it. If you don't really have the simple measurement, we need really to articulate at least proxies. And now the industry is full of these kind of areas of work, including on governance, which is one of the most complicated goals of sustainable development to measure. But there have been some sort of agreed upon methodologies on this. The whole thing here is basically about reporting, standardization, and disclosure in a timely fashion. That to make sure that we are all understanding what does it really mean if an India-based or China-based or Egypt or Brazil company is reporting on the same thing. We can compare, we can price, we can assess risk, and we can really send the right signals to the policymakers and to the general public. The other thing is basically about the issue of bonds. Yes, there have been a great deal of variety of bond issuance, social bonds, green bonds, all colors, blue bonds for oceans. We have as well the SDG equity-linked bonds. they follow some simple structure for that. First, as mentioned by Mr. Iglesias, that they don't fall into capturing what you should really be getting in a kind of a good conventional bond, the cost-benefit analysis of the bond, its risk, its return assessment. But they have two additional factors. One is related to filtering out the bads, anything that could be harmful to the society, to the people, being engaged in any kind of an activity that could really cause any kind of a disruption to the work towards sustainability, that should be filtered out. And then you need to filter in. Filtering in is easier because you can just link it to the SDGs. And you can see from the presentation by Professor Sainer that there are huge opportunities that you can really link your bond to. So two things here. I would refer perhaps to the SDG equity-linked bond that was issued by the World Bank a couple of years ago. In its structure, it's not the only example, but its structure is very simple. And the second thing is basically about operationalizing the impact investing principles and how to disclose them in order to make sure that we're talking about the same thing. And there is no ESG washing or SDG washing, people claiming what they are not doing.
Thank you. One question for Raymond Zahner, also from an anonymous attendee. There are some very good companies who are serious about sustainability, but many do greenwashing. How to distinguish between the two so that consumers' clients are aware of it? Besides, many sustainability officers in the companies are just glorified procurement officers and are mostly focused on certification standards. How do we go beyond green building and oil drilling? Is the current pandemic a chance to bring stronger sustainability, especially in social and environmental areas, more to the forefront?
Well, I would say a lot of that was already answered by my predecessors. I would just say, when it comes to human behavior, there's a similar principle also for companies. I do think behavior is guided by sanctions and incentives. We could get lost in writing plenty of documents and be euphoric about the ESG, and things could go wrong, particularly now that we have COVID-19 reset. People will maybe struggle and forget about all the good intentions that they have made before and are trying to get the return on investment that they used to have. So we should bear in mind, from the sanctions point of view, there are instruments, I mentioned them, for instance, the OECD guideline, which becomes soft law, it becomes tighter. And the UN Open Working Group, which is now trying to make it, in that sense, a binding tool, could help to prevent the often described unfortunate sudden change when a CEO leaves who was very much committed to, for instance, corporate social responsibility, and his successor thinks this is garbage, let's drop it. And there's no continuity. I think for the SDGs, and thanks Dr. Mahideen for bringing that back up, this means long-term commitment. And we have to figure out a way to use the current positive developments, also that was mentioned by Mr. Iglesias, to capture that and to make it more permanent, because things will change. That's inevitable. And if we don't have some form of, let's say, more than good intentions, one incentive could be that all the public procurement should be based on assessment of good behavior of companies, as an example. I think we need to figure out something that's not going to be too bureaucratic, not too much old times, which wouldn't work anyway, because some companies, if they're very opportunistic, they will figure out a way to navigate around it. But something more than writing up the indices, publishing good intentions, that's great that this is happening, but we have to add something to it so it becomes permanent. or at least more, less short-term and more long-term. Thanks.
Thank you. We have another question from Salim Teliji. Can Islamic finance contribute to the financing of PPP by respecting ESG criteria? I think Ziad or Professor Mahmoud are probably the best experts to give us an answer.
Well, Professor Mahmoud is still muted, so maybe I'll go first until he unmutes himself. Of course it can. I think Islamic finance is really underutilized, just like attention to ESG investing is paid not enough attention to. Islamic finance can be a fantastic instrument for PPP in general, regardless of whether it's ESG or not. Islamic finance basically is based on the sharing of risks, and it is the true aspect of PPP. A lot more can be done there. The ESG side of it also, I mean, if you are going to do it right, you hopefully are respecting values that are enshrined in Islam, that respect the environment, that respects society, respects other people, that respects, you know, I mean, and governance, of course, is something different, but it has to, it also still has some implications, especially as it relates to disclosure and being open and providing information, and be honest.
Thank you. So, I don't know, Mahmoud, did you want to go?
Yeah, I know. Very quickly, from the early days of the inception and the creation of the SDGs, there was some good realization of the potential of long-term finance, including through Islamic finance, Sukuk. And back in 2015, I co-authored a piece with colleagues at the World Bank and a professor at Durham University in the UK. And I was just searching for it. Here it's called On Sustainable Development Goals and the Role of Islamic Finance. And almost half of it is basically about the role of Sukuk and Islamic finance in this area. And more recently, we did a piece on public-private partnerships in sub-Saharan Africa and the role of green Sukuk. So we got into more specific, linking PPPs to low-income, middle-income countries in Africa in the areas of infrastructure, PPP, financing them by green Sukuk based on some good evidence from the field. Here is a way to go into innovation. My only issue with that, and I said it in the presence of the two presidents of the Islamic Development Bank, the current president and the former president, the legendary Dr. Ali, the former president of the Islamic Development Bank, that what we need, innovate, link finance to real economy and the social returns, but please make as much as we can. These projects need to be simple to understand. We don't need really to go into very complicated SPV structure. There should be an SPV somewhere, but we don't need really to make it complicated for people not to understand it. For some of your previous participants talked about how can we understand these things? How can we make sure that there is no washing of the claims or SDG or ESG or green that or blue this? So I think simple structure, fully transparent, standardization is key, disclosure based on international standard, and make it accessible to all for knowledge sharing and for application. But the potential is there, and there are already some good examples in the field. And I think Mr. Iglesias can give some examples at some stage about how the green bonds, the conventional ones, have many brothers and sisters of variety of Sukuk and other forms as well of issuance.
Thank you. One question from Fatima Zohra Rahmoun, maybe for Jaume. Do you think that COVID-19 will quicken the pace of ESG investment, reshape the investment landscape? And some investors have been asking companies to prioritize worker health and safety, among other things. How can PPP project implement ESG investment and place more emphasis on social issues? And the third part of that question is, what are the legal framework and challenges facing the ESG impacts of PPPs? So maybe if you can answer the two first aspects, Jaume, that would be excellent.
Yeah, regarding the social and then regarding the interest, whether the current situation will stop ESG or will, to the contrary, just be a boost. So I think there's this concern of people saying, well, the priorities from governments now, they are moving and they have so much on their plate that ESG will become a kind of a luxury. That's one of the concerns. What we're seeing, though, is that I'm just talking about the private side, is that the interest for ESG has never been bigger than now. And the interest from investors just skyrocketed since February 21st, which was the date when markets crashed. So if you compare the assets going into conventional bonds, for example, or equities, they just went down to the gutter, and anything that had the ESG touch just went up. Not only in terms of performance, but just in terms of money being deployed. So it seems that there's this recognition that the ESG factors help to mitigate part of the risk companies are facing. So I believe this is here to stay. Well, I have no doubt, because none of the challenges that we face, like climate change, like social inequality, like gender inequality, seem unfortunately to fade away in the next few years. So so there's enough reasons to believe that sustainable investing will still play a role. Then when it comes to the second question in terms of social, well, I think that the only thing that I can say is that, and again, from my little corner of the wall, I mean, looking at private investments, is that if you look at which are the most successful companies today, probably they're nothing but a bunch of employees. If you look at the Facebooks, and I'm not saying that they are sustainable companies, just saying that the Facebook, the Amazons, the Netflix, the Googles, the Microsofts, probably 95% of the value of that company is just employees, if not more than that, right? So if 95% of the value of a company is employees, shouldn't you give social aspects the most important role when you try to understand the future chances of that company being successful? And that applies not only to IT companies, but there's a number of sectors, not only in high-skilled workers, but restaurants, tourism, anything that relates to client interaction, then social plays a very big role.
Super. Then the third aspect I would like to give to Professor Remonsana. What are the legal framework and challenges facing the ESG impacts in PPPs? Your microphone, Remo. Mike? Remo, your microphone needs to be unmuted, please.
I just wanted to say, I'd like to stay with the second one and let Zia take care of the third one, if he doesn't mind. The second one, to build on Jaume, one thing we haven't mentioned, or maybe it was mentioned briefly by Dr. Mahmoudine, the SDGs are basically 3 dimensions: sustainable environment, sustainable society, social, and sustainable economy. So the ESG to me are either deliberately exchanging G for E, or it's just gotten forgotten. As much as we have forgotten in a way to help companies to better emphasize the S in their investment, I think the E of SDGs are nowhere. And I just have a suggestion, maybe Jaume, that's possible to do, to create maybe a new, let's say, a bucket of investors who agree to limit their return on investment to, say, 4%. And instead invest in alternative economic development. that could be cooperatives, it could be social development related institutions. But other than what we have mostly still, private sector, public sector, and the rest. So for me, for two, it's the economic sustainability is missing, and it would be great to have a new sort of, you know, investment index for those investors who agree to just stick with a minimum amount of return on investment and say it publicly, and then get a grade based on that, that they also put their money into something other than quick return on investment. So yeah.
Actually, I have to say, since JC said this was the question going to you, I didn't pay attention to it.
So the question, I'll repeat, it's what are the legal framework and challenges facing the ESG impacts in PPPs? From Fatima Zora.
The challenges facing ESG impact on PPPs.
What are the legal framework and challenges facing the ESG impacts in PPPs?
Well, I mean, in the legal framework, because many countries, what they have in their PPP laws is more, it's drafted based on procurement laws. There are no stipulations that the ES and certainly G factors should be respected when projects are being designed and tendered. And this is something that of course needs to be rectified. I don't know countries today that are working very diligently on this. Maybe, you know, there are some regulations that are added outside the PPP laws to get these things done. But I think a major overhaul of PPP and procurement laws ought to take place in that regard.
Thank you very much. We'll take one more question and then we'll have to wrap up because I have to be mindful with everybody's time. Marco Angelo would like to know, the existence of an excess reserve in depository institutions may be read as uneven distribution of wealth. Shouldn't we push for more wealth redistribution through progressive taxation and public spending instead of waiting for investors to contribute to sustainable development through PPPs? Of course, private investment is important, but in sectors such as health and education, public investment has proven to be key to reach affordable, universal access to education and healthcare. Yes, please, Dr. Mahmoud.
Yeah, this question takes us beyond the specific micro focus on PPP projects to the overall economic, fiscal management and public policies, including in their areas for social protection and investment in human capital. What we are trying to say here, and there are some good examples, for any country, and I might be exaggerating the importance, but for any country, and I might be as well oversimplifying, the most important document after the constitution is the budget of the state. It provides the priorities, it provides signals. It's not just a funding mechanism. It is not just the importance of the budget for macroeconomic perspective, that you don't need to exceed budget deficit at some extent, or to have some sort of rules of revenue mobilization to spend. It's basically signaling priorities of the community, the people, and the state. Here, this is your way of dealing with these questions about inclusion, about inequality, about investment in opportunities in education and health. It's basically, what could be the solution in that, in short? It perhaps is to have an SDG budget design. There are some countries, including actually Spain, that has a good design for an SDG-based budget. How to end poverty, how to make matters more equal, how to spend on human capital, on climate, all of that is in the budget. Not to have the budget and then translate it into the SDG language. Any kind of a good high school student can really do that. See the budget and then each item, they can give you the SDG color attached to it, as we used to do in the old days when it comes to the MDGs. Now you need to do it differently. From the local budget in the municipalities to the national budget, you need to design it based on the SDGs. If you do that, these kinds of surpluses here, as mentioned, and deficit there should be bridged through the fiscal, transparent way, not in a kind of punishing, but in a kind of an inclusive way to get matters done. You need, for instance, universal basic income and social protection schemes. How are you going to do it? Taxing, including taxes on wealth. There are some surpluses in some entities. You may need, as mentioned earlier, you need to incentivize them to go from the bads to the goods to the idle ways of using the money to where they are really needed. Even after all of these crises, the global system is awash of abundance when it comes to finances. Many of them today of funds are put in negative yield around the world. You pay to get your money invested, not the other way around. So the opportunities are there, but people need really to have the investment, the return, the risk fully designed and put that in that kind of framework. It needs better coordination mechanism, not just for the PPP good managers and their financiers, but basically at the national level when you are designing these budgets.
Thank you very much.
Just add one word. Fully agree with Dr. Mahmoud. Very important what he is saying. This is something that all of us need to be pushing our decision makers in government to think about in this way. Actually, SDG number 17 is about partnerships, and it is the one SDG that is talking about how to achieve the other SDGs. So you have 16 SDGs that are related to the issues that the person that asked this question is concerned with, mainly having to do with the well-being of people. And PPP should be regarded as an instrument to help deliver on that. It should not be the only instrument, but an important one.
On this final word, I would like to thank everybody who attended. We're very proud so many people took time to follow our webinar in association with Infra, PPP World, and DEİK. Many thanks to our many interesting questions and to the speakers. We're planning an op-ed, a sort of a solution paper on the conversation we had today, and we will provide the video of the webinar shortly. We're always grateful for your feedback on what we did well and also what could be improved. We have recently relaunched the website wap.org. We invite you to go visit it, and we would be very happy to onboard you in our WAP family of PPP professionals and with PPP units, PPP professionals, corporate members, or simply as a PPP enthusiast. Please follow WAP on LinkedIn, Twitter, Instagram, and YouTube. Thank you very much for having been with us this afternoon.
Thank you.
Thank you. Bye.